Hey, what's up everyone? Welcome back to another episode of Price Targets with your host Bitcoin Jack. It's Monday, pretty crazy volatility into the opening of the week. Not per se on Bitcoin, but we had that pretty ugly bearish close on the S&P 500 on Friday. And at the start of the week, we'll be diving into that. We've seen some volatility on a bunch of FX pairs. And I don't know. The market is going to open in 30-ish minutes. The S&P 500, that is. And I think we should be looking into what's going to happen next and what I think is most likely and how to protect ourselves and where the highest risk to reward trades are. First, before we do all of that, please have your attention for PrimeXBT, our lovely sponsor. They will give you up to 0.5 BTC deposit bonus if you sign up with them. You can trade spot, futures, equities, and commodities like gold. So if you appreciate these videos, consider signing up using the ref link and using the promo code BitcoinJack to get the deposit bonus. There's some conditions that apply, so make sure you're aware of that. It's pretty cool. Let's say you deposit 0.5 BTC, you will get 0.5 BTC matched, and then you can trade with 1 BTC in total. You won't be able to withdraw the 0.5 they give to you, but any profits that you make on it is yours. So if you're confident in your trading and you want to just like get some kind of a multiplier on your profits, go check it out and let me know what you think. Thank you, Prime, for that. And let's dive in. I'm not really sure if I want to start out with Bitcoin, but let's just go over it really quickly. We talked about the diagonals here. We talked about the range here. And right now, if we zoom in a little bit, I do think there's an argument to be made for upside if you are willing to take it. Personally, I will probably not take it unless I see more confirmation on it. But basically the idea floating around is that last week we had this kind of supply going down like that, and then we had a fake out to the downside, taking out the wicks, and then we rallied through the supply into range highs and beyond. Similar setup is appearing here. Personally, I'm not going to take it because I don't like it when two setups like appear at this shortly after each other. But from a risk to reward perspective, I do think that if this is going to rally, it's probably going to rally into the old zone we reviewed up there, which is like 44.4. That means along, let's say at current price, into the level up there, with invalidation like straight below us, is a pretty ridiculously high RR. So this is almost 10 RR. So if you think that the chances of that occurring is higher than 10%, that's valid. Honestly, personally, I do think that this red line was the bottom of the range. After last week's video, kind of had the short trigger as we broke back down the green level here and the black level here into our box here. And this, to me, was the range low. I don't think that this now is part of the range. I do think that we're outside of the range, and then we retest this, and then we do trade into the next diagonal / horizontal, right? And currently there is 30 minutes waiting to see what is going to happen when the markets open, the S&P 500 opens. You probably would use this, if you want to take the upside trade, you feel confident taking this diagonal into orange would be great guidance to cover. Okay. Personally, not a fan of that, but pretty tight invalidation here and then if it rallies, I do think it's going to rally significantly. So great risk to reward. I just don't think at this point it's worth the risk. So if we zoom out yet again to make it slightly cleaner, it makes a lot of sense for us to travel to this diagonal, and that diagonal pretty much, if we draw, if just a quick rough draw, is also the support of the, bear flag, or however you want to call it. And then, from there on, that's the next level. And since we're doing these twice a week, I do think that's, that's plenty to work with here. If it goes any lower, so, that's like 36, then we're going to get into the region where we're going to be retesting like 35, 34. But it's going to be outside of the bear flag. Bear flag could have like a fake out if it trades back inside. So this is the diagonal of the bear flag. Let's say it trades down here and then it starts reclaiming. Then it's, it kind of starts to feel like a double bottom, and then maybe that was the bottom. Personally, I do think we're going to go much lower if we start breaking down. All right, so S&P 500, I'm going to grab this because we're so correlated anyways. It's at key support. In my opinion, any acceptance below here increases the likelihood of just, confirmed bear market on S&P 500, and not an actionable trade into like this week, but eventually, if we lose that, I do think we're gonna go and come retest the 35, 36, 3700 area. So, if that happens, it's going to be very tough to be bullish on any market. And especially if we ask ourselves, why is everything so heavy lately? We talked about the dollar index. So the dollar index on our last video kind of was, all right, the 100 level here. And I do think it's going to start trading into 102, 103 this week or next week. It's been on a roll, and I do think it's just going to extend quite a bit. We can look at USD CNY, for example, which is the Chinese yen or yuan or renminbi or however people call it. It's a pretty insane chart if you look at how quickly this is going. If we look at a daily, that's 1%, and then in just a few days, that's 3%. That's a lot. So markets that are stressed usually see a lot of FX volatility, and it seems like we're seeing the FX volatility come in first, and then probably going to see more volatility in other markets. But do note that, for example, this is the CN50 China. It's pretty volatile as well today, 4%. We can look at the Japanese yen. It's also on its hair. We can look at the euro. Also not so pretty. So I do think that the dollar is just going to drag upwards as all these other countries are still performing very loose monetary policy, and America is, the United States is tightening. And I do think that just shows that the Fed is not fucking around, and that people know that the Fed is not fucking around. Markets are showing it, baking it in, and markets may be wrong, like to some extent, and overshoot, which is fine. It always happens. Markets are not that rational, but FX markets and credit markets are generally a lot more rational market, a lot more rational than equity markets. So I do think that the whole, pressure that we've seen on the yields that you get on the bonds, they're going sky high. So I think these are pricing in trouble, have been pricing in trouble, and the S&P 500, for example, is lagging when it comes to that trouble. So Bitcoin, I do think it's gonna follow suit. It just doesn't seem great. If the dollar appreciates in value versus other currencies, it's really hard for any asset to appreciate against the dollar. Obviously, if there's enough demand, it will, but it is some constraint. And as people are fleeing to safety, as dollar demand goes up, it's a kind of a vicious cycle until that cycle itself breaks again. But I do think we're not close to the end of it, and it's just going to accelerate. Then let's quickly jump to ETH. So ETH has been kind of waiting for this monthly setup, but as we talked about it last week, we were trading around here. I do expect this is going to start losing against the Bitcoin on the Bitcoin pair, and give back all, or maybe even more, or at least some of its gains it had in the last couple of months. So same setup applies. You can watch the previous video, the video before that, or the video before that, and you will have a good understanding of the plan here. I did kind of get into CIS. I really liked how this kept bouncing off the level here. If we kind of ignore the sell-off on the left here, we kind of created this range low, and then this range low retested again with a deviation here, or a fake out, or whatever. I do think that there's a good possibility for this now to kind of start breaking out, as you can see with the squiggly here, and then it kind of makes sense to double the range. So if we measure the 0.5 up here into up here, and then the other thing that makes this a very beautiful place is that we had the wick down here where we found support. We had resistance here, support once again, broke through it, retested it, and then had the final sell-off. So I do think that that's a very reasonable target to start out with. Where are we wrong? I think below here, below this wick here. Okay. Then Luna, we rallied into the level here. I'm very happy that I didn't do business at the red level here. I'm not going to touch this for now. I'm kind of freaked out a little bit, but I do think that this is going to go down. I think it's a giant Ponzi. Don't hate me for it, but the way Do Kwon is acting, the way everything's setting up, the way this thing is hyped, it just spells trouble to me. But I think I just don't know. I want to risk it right here, so I'm just gonna let this one go. And now there is action on Axie. We lost it. So like I said last week, if this kind of reclaims, then this is just a fake out, and I do think we're going to trade up here. But it has lost it. It's lost support. It's closing below. I mean, at least that's what it's trying to do today. So I'm just going to wait for today. But I do think that any bounce into here is a short opportunity. If it breaks through it, then it probably will retest the level, and any exit would you would probably be able to exit at break even. And then obviously the levels here, to me, make a lot of sense. So maybe I need to draw one more level in between here. So basically at $28. But I do think that this is super ugly, kind of a head and shoulders, maybe, I don't know. But I would love to get short on this. The other thing, yeah, let's see. Ooh, so this is also pretty wild trade so far. We talked about it on Twitter. We talked about it on the previous videos, but this is trading quite quickly into first target. And I do think that if everything is gonna see hammers today, tomorrow, next week, next month, this is at least gonna go and come back down into the 1600 level. 1600 range all the way down here. Obviously, don't want to, like, you know, trade it. I want to trade it level to level. So first level at 1875. Why? Well, it's kind of the level that kept us at bay. You know, if we extend it to the left here, that's pretty clean deviation above this level. Then rejected at it, then broke through it. Obviously, there's some levels below it, but I do think it's going to get here. And if that doesn't find any support, if that doesn't send us higher back to all-time highs, then things are going to retest this diagonal here and probably trade all the way down to the range low of 21. Wow. I don't know. Like, oh man. For example, here, take the euro, right? Imagine this trading all the way down here. Imagine it's losing this diagonal, losing that diagonal, trading back into this wedge. So this is kind of like a fake out. Then it makes a lot of sense for it to reach the, you know, the bottom diagonal again into the 2000 lows. So I don't know, that just looks like a lot of problems in Europe, but that's not you know, that's contagious. That's gonna spread out problems into the rest of the world. Anyone in the US thinking that it's great that Europe is going down is probably wrong about that. It just means that we go to the shitter first and then drag everyone else with us. Or perhaps China is dragging everyone else with it right now, because after, you know, Macron is probably winning the elections now, or has won, that should have, you know, solidified a few things in Europe and some support and sentiment, but it just looks like this is just going further down and down and down and down. And that would, you know, just spell doom in general. Think that, is there anything we missed? Oh boy. No, I don't think there's anything else I want to talk about now. I think that's it. It makes a lot of sense to me to be very cautious to the upside. A lot of people are comparing the current bottom to March 13, 2020, which, you know, I just don't understand why people are making that comparison. Like, seriously, how do you... Okay, so if people have to compare it, how the hell do you compare it? Look, this candle from up here, back then, until here, liquidated everyone. And then it consolidated, and within 24 hours, it did it again, liquidating again everyone who bought the liquidations of the previous liquidation round. Like, this entire candle, like daily candle or 2-day candle, like 50%, right? So comparing that to whatever is going on in the last 3 months, where we basically ranged in a 40% range, or how much is it? Let's see. Like, how much? slightly over 40. That's a lot different. Like, obviously, coming from there to... No. Stop it. Obviously, coming from, from here is 30% down, but I don't know how the hell people compare this. This is like slow, quote unquote, price action compared to what happened then, especially considering the average. Let me put on. Look at that. Like losing a range and then dropping like double of it. If you draw, see, like on a logarithmic scale, that is just double the range here. See the 0.5. So I don't know. It just doesn't make sense. But please keep doing that, because the more people buy here, if it really does break down, the uglier it's going to get, which suits my bias. So I wouldn't oppose that. I'd say, I'm not giving any advice. I'm just sharing what I'm, how I'm looking at it, and that's how I'm looking at it. Don't blame me if things go wrong. Don't blame yourself if things go wrong. But just know that if this is really going to be quote unquote a bear market, and to me a bear market, I don't care if we're down 50% from the all-time high. What I care about is, are we trading in a bullish trend or a bearish trend? For now, this is neutral, right? Higher high, higher low. So essentially, this is even quote unquote bullish in the larger picture. But once you start trading here, that's a bear market. And a real bear market in Bitcoin, I don't know. But honestly, like if it's really like a cyclic top, which time-wise is possible, just know that corrections of 80 to 90% have happened in the past, and for some reason people think that's never going to happen again. I don't know, maybe if the whole fucking world goes to shit, it might happen. I don't know. Anyways, lots of blabbering, 22 minutes in. I hope that was useful. I hope to shoot one on, I think, could do Thursday. Maybe Friday. It kind of depends. Like Wednesday is King's Day in the Netherlands, so I might be enjoying myself throughout the whole day and not be worth much on Thursday. So we'll see how that works out. Maybe I'll shift, I'll push it back to Friday. Hopefully I won't have to and do it on Thursday. Hope you guys enjoyed that. And, if you did, like, subscribe, whatever. And check out Prime XBT, our sponsor. Cheers.